start the session, and it will be not about directly into NPS. Let's talk about a bit of old regime, new regime, and then go into the taxes. And again, my name is Anuram. I'm founder of ReviseTax. So we founded this company in 2019 to help salaried employees with their tax planning, tax advisory services, and anything related to personal guidance, what they require in the day-to-day life when they have questions about investing and everyone. We are working on that aspects. So our entire focus on helping salaried employees is our motive and intention. That is how we started in 2019, and we are going on from there onwards. So today we'll be discussing about old versus new regime a bit, and then go into the national pension scheme. We can understand more about what is normal NPS, corporate NPS, what are the rules with withdrawal, active allocation versus auto allocation, and any general questions you have around taxes or NPS, we can have a conversation. So I think most of you have already known that from 1st April onwards, the tax slabs have been changed, and our tax rates are heavily reduced under new regime. And I think most of you would have already selected what regime you have to give with the company. So I just wanted to run a poll to understand and explain what is the to understand how people have selected the thing. So just a quick poll, if everyone can answer whether you have selected old regime or a new regime. So I think I'll just share. So it is majority, 70% of the people have selected for new regime, and 15% of the people have selected for old regime, and the few people are confused between old and new. So no questions asked based on your package slabs. If it is no doubt new regime is giving benefit to everyone, about 1 lakh rupees per person, irrespective of whatever the income slab you are there, based on the better rates without any deductions. But as per the government, the only deduction allowed is NPS. So how we'll take a benefit out of it will be the next phase. So the people who have selected you who are confused between old versus new regime, this is the magic number what we have come up with. So basically when your salary package is in between of these packages, so to compare between old versus new, if you are hitting this magic number, your tax between old versus new regime is one and the same. Say you are at a 7 lakh rupees package and you have a 1.5 lakh rupees deductions with HRA, ATC, ATD, NPS, anything together. What happens is, once if you have 1.5 lakh, your old versus new, old tax and new tax, the tax is one and the same. And once you cross this 1.5 lakh rupees, you will be having an approximate tax savings in that sorts. So with the help of new regime, what is happening is up to 10 lakhs, and if you have a 4.5 lakh rupees deductions in old regime, you are at zero tax. And even in the new regime, you are at the same situation. In new regime, at 10 lakhs, there is no taxes at all. So in when your package is at 14 lakhs, what happens is your magic number is keeping on going up. You have to beat 5 lakh 18,000 worth of deductions to go into the zone of beneficial thing. So how do we fill up all these deductions? We don't have much of a deductions, right? So because of that specific thing and the number of documents we have to submit to the companies, people are happy to choose with the new regime and say that I need not submit any of these details, and also need not worry about anything because I already am paying lesser tax compared to the previous year. So that is how this year new regime made a lot of sense for everyone. So to go into the next steps, I would like to ask few one more information. It's about which slab your income is being into. So that will help us into understanding what is the better edge cases, what can I add as a points. So that will be an best case scenario what to understand. So I got an information how the audience income is being different at a different slabs. So on the basis of those things, I think we can have more insights and understanding about which are the points I can add on more value to the everyone. So yes. So I'll just end the poll. It is just an indicative information needed for me to drive where the thing is going on and understand more about thing. So in the poll, what I've done is I kept income up to between 13 lakhs, income up to 13 lakhs and 13 to 15 lakhs and 15 to 25, 25 to 50 and 50 lakhs. So in this slabs, there are two edge cases where they can take the maximum benefit of NPSs. The slabs between 13 to 15 lakhs and the person who is at a 50 lakh slab. These are the two segment of people who can take a maximum benefit of this NPS. And others, there will be a tax saving. It is more of a personal finance decision. For the people between 13 to 15 lakhs and 50 lakhs, this is more of a tax saving decision as well. For them, they'll be able to save taxes along with the personal decision about retirement and other things. So yes, let's go to the next slab. Before we go to the NPS, the people, majority of the people are in NPS, in new regime. So one tip where they can save maximum taxes is talk to your HR and the company and see that you are contributing PF at a maximum level rather than at an 1800. So what happens in the Provident Fund is it's your choice. So basically your CTC is 15 lakhs. And most of the companies prefer to have an employee PF and employer PF at 1800 rupees because they will be able to get a higher cash in hand. So that was an intention to put it at 1800. They're always given, the employees are always given an option between 1800 and 12.36%, whichever is higher. So for the edge cases again, and everyone in usual, so PF is one of the best instrument in the form of investment because you will be getting 8% of interest, no taxes on it. So it is technically you're getting 10.5% return on investment, and that is being kept aside. Of course, you face some trouble with withdrawing, connecting your PAN and Aadhaar, mess with the officers and everyone. That is an usual story for every salaried employee. Sad to be that, but the point is the product is so good. It's like you can park your money at 10% compounding, and there is no tax on the 10% on the 8% earnings, which is giving our effective return as 11%, 10 to 11% range. And it is compounding as a lump sum and savings, which is not coming to your account. So personally, also it's not there in our account, so we don't tend to spend that money and stuff. So that way, and the additional benefit is the taxes. So what happens is, for an example, a guy is making 15 lakhs. When 1800 rupees is his PF, what happens is from your 15 lakhs of CTC and 1800 into 12 months, that is 19,200 and 21,600 and 21,600. These both the money are kept aside, and then the balance is being split between gratuity and your monthly 12 months package. So when you switch from 1800 to 12% kind of a thing, and 84,000 rupees sum from your side and 84,000 rupees from sum from the employer side will be reduced from your package, and the balance will be given as a form of cash. So the employer contribution, which is like the 12% when it is being maxed out, on that portion, it is not taxed. So that way you are saving taxes of 30%, or when the slabs, basically your respective slab between 15 to 20%, you will be having a definite tax savings on the contribution as well. So that is a benefit what will be given to you when you take the maximum PF as your contribution. But however, there is also a personal finance decision you have to look at is whether my cash flow is helping my EMIs and monthly expenses or not. If that is keeping aside, PF at maximum is one of the best thing what you can do as a part of tax saving exercise, even though you are in new regime, because your CTC gets restructured, your same amount is same, your CTC remains the same, but your basic component and other things have will be changed. Ritu, can we? I mean, I think couple of people have raised a hand. So yes. So can you ask that question in the text, please? The people who have raised the doubt. Q&A, open questions. Difference here is here if you are below 15 lakhs. Okay. So just a moment. Raj and Tejasvi, can you ask the question in Q&A or in the chat, please, so I can resolve that question before I go ahead? Raj, I think you can ask also. You need not even text. So the PF maximization can the HR restructure the CTC to maximum PF? in the middle of the year. Sorry, they cannot do it in the middle of a year. Should be from the start of the year. So maybe April and May would be the best time. I've asked my HR and my tax consultant. This is the response. We are applying general maximum contribution to employer. We cannot dilute the portion. May affect in future as a per compliance. However, employee can opt for voluntary PF. So voluntary PF will not definitely save you any taxes. Uh, so voluntary PF is not available, not a deduction or a tax saving instrument currently if you are in a new regime. Old regime people under ATC that is maxed out and they can use it. What is it like? But however, the point is the maximum when you restructure the CTC, the employer contribution is the only way we can save taxes. Chandrasekharan, sorry that see each company have a different policy for their employees and things. So the company should also be flexible enough to take that option and give that maximum CTC restructuring to them. And if they're adamant that they don't want it to do it, we are sorry. You have to talk to the HR, like a friend, all the people together once and something like that. But more or less, you can drop a message about your company to Ethica team as well. Maybe they can talk to the HR from the perspective and try to help out in this aspect. So the new regime people who are just paying 1,800 per month, they have to check with their HRs if they can make it to the maximum so that they can save taxes. And please check your cash flow before opting for it. So let's go to the next question, NPS. So irrespective of whether you're old regime or a new regime person, and for that matter, anyone, so everyone wants to look at their fire number. They wanted to retire early. They have all the options. And for retirement, NPS is one of the best option what government has created. So also one more problem with the NPS as a whole is NPS, if you ask your consultants, like not of the tax consultants, if you ask your insurance people or as an investment product, if you ask someone, they immediately tend to tell that, no, this is national pension scheme is not that great product. We have a pension scheme with our company where you can invest and you will get more returns and more things and stuff. So uh, pardon me for using the word, it's total BS. So they wanted to get their commissions, they wanted to get their money or something like that. For that purpose, when you ask NPS, National Pension Scheme, they pitch you with all the other products which are not so great for you. Why is that? Because I mean, sorry to say that the national pension scheme given by the government doesn't, no one makes money in this one. It's pure pension. So government tries to put every penny back into the investment of the person based on their structure or how they are using. So because of that, people will generally uh, tend to ask you to put into the schemes. So because of that, that is a thing. And national pension scheme has two components. One is corporate national pension scheme and normal pension scheme. We'll come to it. And before going it, so national pension scheme is something where from age 18 to 20, 70, everyone can join. Because of the compounding benefit, government has recently launched NPS Vasalya as well. But the point is that is not giving you an additional tax benefit. So on your kid might not be a great product at start, but government, because they are removing all the deductions and stuff, they are trying to improvise the NPS. So there in future, in the next coming few years, there will be a lot more changes for the NPS as well. So NPS has two tiers, tier one, tier two. So tier two NPS is nothing but just your investment kind of like a brokerage account or something. You put your money and that goes into your pension account, and whenever you want you withdraw it. For the number of days it is parked over there, you'll make some money and you'll withdraw that. So that is how the tier 2 balance works. Whereas tier 1, it is for the tax saving purposes. Once you put the money inside it, they have the withdrawal restrictions and everything. So some most of the money comes at retirement, and there are two different aspects to it as well. We will discuss in the next slides. So in what is your money, what is the money you're giving to NPS, what it is doing. So when you give some 1 lakh rupees to the NPS, or say deposit 50,000 to your NPS account, there are automatically this money goes into four components. One is equity, corporate debt, and government bonds and alternate investments. So each has a maximum limit. You can go as 50% of any 50%, 50% kind of a thing, and you can invest. You can choose those things. So active choice is that one. I can choose how much of my 50,000 should go to equity, how much of my money of 50,000 should go to corporate debt or alternate investments or alternate assets for that matter. So alternate assets is the interesting aspect in the NPS. When we wanted to go with alternate investments, AI funds, what happened is investment funds and alternate classes, something like NPS decides to put your money in REITs as well. So that is restricted to the maximum 5% of your entire thing. But in usual, when they wanted to go with schemes where we require 50 lakhs kind of a thing, that kind of exposure also will be coming from the alternate assets. So that way, your money is being managed actively. And in the case of auto choice, what happens is based on your age. So I'm 35. So up to 35, what happens is whatever the money you're contributing, 75% goes into the equity component. Whereas the balance go once I cross my 35, there is a matrix which they follow. They will just generally change your percentage between whatever the contribution you are doing. Yes. So, uh, someone asked, can NPS has NPS investment in tax saving in new regime? Yes. If your company is doing that investment, you have the tax savings. Below 12 lakhs, new regime, no need to pay taxes. Yes, you need not pay taxes, so you need not opt NPS at this point of time. But you need to know about this is because when you are between 12 to 14 lakhs kind of a package, each case, what happens is if you opt for NPS, you will fall below the line of that taxation and you'll be saving huge taxes. So edge cases have to be knowing about NPS a lot more. So, few questions. Can US citizens residing in India, earning in India, avail NPS benefits? Uh, so you can avail NPS benefits, but if you are in old regime, yes. In new regime, tax benefit is missing, but all the other benefits you'll be getting out of it. Can also opt for raise in share now for NPS and PF. Yes. So NPS is something companies allow you to declare till December also. Again, company to company, the policy changes. So we need to be asking our HR about it and those things. So someone asked which portion has the maximum returns and asset class. So when we talk about just returns, the problem is the higher the return, the riskier it is. So equity gives you the highest return as well as the highest risk proportionate. Corporate debt and government bonds have the lower risk returns. So they pay you some 8%, 7% kind of returns. Whereas equity, because it is a little risky, it goes up to the mark of what we say 12% return kind of a thing as well. So as a whole, this is a very good one for the investment option. And one thing, question and answer at the appreciate if you take the question and answer at it. Sure. NPS contribution to got it. So yeah, let's go with the next questions. So asset classes, as we discussed. So historically, on an average of 20-year period, if you look at it, NPS has delivered 9 to 11% CAGR. But if you take a smaller portion of 5-year period, what is it doing is it is giving anywhere between 20% to 22% returns as well. So uh, for a specific 3-year period, it was higher because of the after COVID, the jump in the markets and other thing. But if you look at a 5-year period, they are giving good 15 to 17% return. There are only 10 companies in which your pension is being managed. Those pension companies also can be selected from company to company basis. So coming back to the biggest question, biggest point, national pension scheme versus corporate NPS. So generally NPS is one and the same as a whole. So I go to a bank account, open a bank account that is equal to my NPS, let us assume. So if I put my own money, let's say from my another bank account, I have transferred 50,000 to the NPS account. That is called our self contribution, which is covered under 80CCD and which has a 50,000 limit as a maximum above 80C. So this normal NPS, I mean, to differentiate between these things, we created that normal and corporate NPS. But if there is nothing called like that, it's only NPS, National Pension Scheme. You will have one account, PRAN number, and what happens is to that PRAN number, If you contribute 50,000 rupees, you can claim the deduction for that one under old regime. So the people who are claiming under old regime, they have two options now. They can contribute 50,000 at maximum and also ask company to contribute to NPS additional money up to the percentage of 10% of your amount. So corporate NPS is something what you ask your company to deduct from your CTC and do it. So in the previous example, we discussed 15 lakhs is the CTC, right? So out of 15 lakhs, if I'm in old regime, I can deposit 50,000 rupees and get an additional deduction than ATC, and also ask my company to contribute 10% of my basic component. That would be about 75,000 maximum per year to NPS again. So I'll be saving tax on 50,000. I'll be saving tax on 75,000 in old regime. In new regime, the problem is when you contribute your own 50,000 to the old account, an NPS account, you won't get any tax benefit. Only in new regime, only your employer can contribute to NPS and you can get a tax benefit. So that is the thing where a lot of companies might not have the NPS applicability. They did not launch their NPS yet. So that have to be discussed again, company specific norms. You can talk to the HRA, we can also HR, and we can also talk to them and help you to implement the NPS part as a thing. So, but the main difference is in new regime also you can get a benefit from tax savings under NPS using the asking your employer. If your employer has that facility enabled for you, you can select in new regime. Also, the benefit what they have given recently is 14% of your basic can be contributed. In old regime, it is only 10%. In new regime, it is 14%. So that way you can contribute more, you can save more, and if you look at it, how it is happening is your NPS gives anywhere between 10 to 15% return. And you can also save because of the new regime, tax rates are lower. You can also save another 20% kind of a return. On the small investment of 1 lakh rupees or something, you are compounding at 30% return. So you're saving taxes, you are investing that money, and you are able to save that money. So that is how the NPS is helping you to earn money as well as save the thing. So the tax benefits what we discussed. So this is the one. NPS old regime, normal NPS over and above the ATC limit, 50,000 rupees. Corporate NPS, it is 14% of your basic component. So that can be your NPS. Maximum is 7.5 lakhs as a contribution, including your NPS, PF, and any superannuation you have. Your employer can contribute only up to the extent of 7.5 lakhs. So for the 50 lakhs and above salaried people, they have to be little careful around it, because if your PF is around 12% and you're contributing maximum of 14% somewhere, you might hit that 7.5 lakhs per annum kind of a thing, and you might be applicable for another taxes. Already 50 lakhs, once you cross 50 lakhs, you have a surcharge. On top of it, there is a perquisite tax which might be coming in if your contribution is crossing 7.5 lakhs every year. So coming to NPS, the major drawback with NPS is the only one rule is the withdrawal rules. So what happens, what is the NPS is around? NPS is an retirement product as we discussed. So you wanted to retire early, you wanted to retire at 60. So as per the NPS, 60 is the norm. We can push it to 63 by a request, 3 years more. Up to 63 years, you can have this national pension scheme. Once the 63 years is hit, 60 or 63 is hit, you can withdraw your accumulated funds altogether up to the extent of 60%, where you won't be getting any tax on that one. And the balance 40% goes into the annuity. That is like an payback kind of money. And they'll give you monthly salary kind of a thing, which is again exposed to taxes. So that is how it happens. So there are two again, as we discussed, again, going back to the normal NPS. Normal NPS, when you're contributing from your own, you can withdraw thrice during the up to 60-year period. So say I've transferred 50,000 rupees per year for now 5-year period, which is my own ATCCD section deduction. I contributed from my own money. And whereas the corporate NPS, I ask my company to deduct from my salary and deposit, right? That is the difference. Now, my own contribution, I can withdraw thrice up to the 25% of the money what I've contributed during the 30-year period. Say I contributed 5 lakh rupees, I can withdraw 25% of the 5 lakh rupees 3 times during the period of 30 years. So 1,25,000, 1,25,000 kind of a thing. But however, when it is employer contribution, you cannot withdraw that money. So when you ask your company to do 75,000 NPS contribution on your behalf, you have to be fixated that this 75,000 you cannot touch till your age is 60. Yeah, you can. One thing what you can do is you can ask next year, stop your employer to stop that, or you can reduce the percentage or increase the percentage. But whatever the money is going into the NPS from your employer, uh, the corporate NPS will not be, can be withdrawn. So that is logged for your retirement. Or just like an early exit, if you're saying that I am retiring at age of 45, I don't want any, I am not gonna, I need not wait till 60 years. What happens is they'll give 20% to you immediately tax free, and balance 80% will be in the form of salary or a pension to you, and it is mandatory annuity. You cannot withdraw that money. You can maximum tell them that you are retired early. That's it. So that is how this corporate withdrawal rules works. And in case of anything happens to the subscriber, the bala amount will be, entire amount will be given to the legal heirs, and there is no annuity involved in it. So that is how the withdrawal rules of NPS work. So that is the only drawback, and that is the main intention or motivation for the government to give it to you is save money for your retirement. That is the motive. So coming back to the concept of active versus what is it like active versus auto choice allocation. So I'll just take couple of questions. I'll just have a look around it. Alternative assets means okay, yes. This is all employees or only for so this is for all employees, government, non-government employees, everyone have the same percentage, but government employees have a certain percentage more. They can contribute more, or government contribute some more money to them. So that is how there is a differentiation. But everyone, all in all, everything is same for everyone. So coming to the allocation and auto allocation and active allocation concept. So whenever I'm dropping my money into the NPS, you have two options. How the money have to be managed. It is by default set for auto. What happens is your money goes into the account, and based on your age, what happens is as your age is decreasing, the amount of exposure to equity will be reduced. Whereas in case of active, I know what I'm doing. I can set the limit. So let's say my NPS balance is 7 lakh rupees today. In active choice, what happens is I can go and give an instruction saying that I want 75% equity today, and balance 25% will be 20% will be in corporate bonds, and 5% is in alternate assets. So alternate assets means it is like AIF fund or REITs, REITs, where the fund assumes that there is a risk or better returns can be possible. They'll be investing into it. So all the other options other than equity and bonds will come into the alternate assets. The pension house will choose what is that alternate asset they wanted to go ahead with. So in the case of active thing, I can choose the percentages. So say the war has come and war has been little bit serious. Let us assume it is going for a couple of months. What you can choose is you can just directly go and say that I want 75% maximum exposure to equity now because equity is falling, buying more would be a good choice, or you got scared. And what you can do is you can reduce the equity percentage to 25%, and balance 75% can be your bonds. So that way, equity is the restriction. Equity can be going up to the maximum of 75, and it can go as low as 10% also. So active person who is looking into markets, understanding the ups and downs of everything, for them active choice is the best option because they can go, they can see what is the market is heading to. If it is market is an overbought situation, they can say reduce the equity and go maximum into bonds so they can maximize the returns. And if the market is down, they can go maximum 75% and buy more equity, accrue more equity on monthly basis or annual basis. And when the market is up again, they can sell it out and stuff. So theoretically, you can do these changes in the allocation 4 times in a year, but asset management houses are not allowing that frequent switch in the percentages. They are only allowing you to do 2 times. So that is the one small drawback. Whichever the person you're going with, those are the problem. In auto choice, it is simple. You just forget about it. And as I'm aging more, government has a matrix given saying that percentage of equity allocation will be reduced. Why is that? Because risk, yeah, it is all about retirement what you're talking, right? You cannot put maximum amount of inequity and someday some event happened, so you are retiring and there is a big war between US and China, and it has fallen down by, say, market is fallen down by 20%. Your retirement is just like that, gone in a moment. So because of that, government says that in auto choice, I won't take any risk. I don't want the bad mouth. Already I have the enough on my plate. So they'll just give you the lesser percentage as you go, as you age, and invest more money into the bonds, where your return will be 8-9% kind of a thing. And because there is no tax on the returns what NPS is generating, so that is a good option to go ahead. And as I feel that in the next few years, the NPS will be the only option. People might be, government will be coming up new with new creative things that you can invest from those accounts like US. So US has an option where the individual can invest from his IRA account into startup also. And startup gives you 100x, even entire 100x is tax free, and that will be for your retirement only. You cannot touch it, but you can manage it in a better manner. So I expect there will be reforms in the NPS going forward because of your money being available with the government for 30, 40 years. So that is the point around national automatic and active thing. So it's the time for questions. Sorry, I've because the limit time is at 4:30 is a hard stop, or maybe 5-10 minutes over. I had to speed up the explanations so that I can solve more of the questions in Q&A as well as chat. Sorry for that. Yep. So my package is 15 lakhs per annum, which is better, old or new. I opt for VPF NPS to reduce the tax deductions. So one person has asked that his package is 15 lakhs. New is best for you to go with the tax saving perspective, but voluntary PF, if you're personally thinking that you wanted to save money, is good, but it is not helping you to save any taxes. NPS is helping you to save taxes. Also, you have to look at your age to see how much NPS maximum you can go at. And also, please note, NPS in the sense it is not what you are contributing, your company have to contribute for it. So that is one for it. Which tire to choose, how to choose, what should be the rationale. So tier 1 versus tier 2 is nothing but tier 1 gives you the tax benefits. Tier 2 is just an investment option. So tier 2, you can skip it because it doesn't make sense, right? You can put your own FD, you can put your own equity. So why to go with NPS and put it in tier 2? If you're saving taxes, that is a big push for you. So tier 1 NPS is the investment you have to put in, and what happens is tier 2 is you can skip it off. Can we opt for corporate NPS anytime via flexi basket? So again, this is company to company policy. Whenever you want, some companies allow you to declare till December also, that you can in December also you can say that contribute NPS this much to my account. They'll do it. Some companies are not that flexible, so it is company to company. I cannot comment on all the companies together, but few people generally allow it. Can you suggest a website for tax filing and tax return submission? You can opt us, you can do with us, or based on the complexity of return, I would suggest the rates are pretty minimal on online platforms. You can explore few of them and go ahead with it. I would prefer go ahead with a person, CA or some other person, because you can ask few more questions to them. Yes. Also, can I opt for raise in share now for PF and NPS? Yes, because we are in the start of the year, you can ask your HR to raise some of the NPS related things. NPS, again, few people are just implementing, few people have already implemented. Based on that, the contribution changes, the things changes. It have to be looked with your HR. I have opted for new tax regime and my CTC is close to 21 lakhs. Can I opt for maximum PF? What would be the maximum amount for you? So if your package is 21 lakhs, I'm assuming 50% will be your basic component. So 1.2, 1.2 lakhs. So 2.4 lakh will be entire contribution to your PF. So that would be like, that way you will be saving 40,000 rupees in taxes, even though you're in a new regime. Can If we are below 15 lakhs, Kavita has asked, if you're below 15 lakhs of income, NPS is good because you will be closer. You have to look into the depth breakup. This is an edge case. 13 to 15 lakhs and 50 lakhs to 53 lakhs. These are the edge cases. Why I'm calling edge cases is because PF is a question mark, how much it is 12% or 1800 rupees. So we have to look into that in depth and decide whether it is giving the maximum benefit or not. Sometimes, Kavita, for some people, if they are having a maximum PF and NPS also is opted, they might fall below the 12.75 lakh limit and save a lot of taxes. So that calculation you have to check in depth once taking the call. Uh, Next, can we benefit with NPS in new tax regime? Yes, Santosh. New tax regime, you can get a benefit only if your corporate is helping you to contribute to the NPS. In nutshell, so what would be the ideal corporate NPS contribution on 24 lakhs? So see, percentage is your own choice, Vishnu. You can decide what is the best for you based on the cash flow. Cash flow is the main deciding factor because say you're having just home loan and no other EMIs, then I would say maximum go to the NPS because closing home loan is not a great option from my personal perspective. That's another day, another Friday story. We can have an entire day session on that one. But NPS, yeah, you can go ahead with what is it like, say 7% to 8% to start off with. Slowly, you can increase the top up. And please share the recording best tax regime for with 35 lakhs LPA. Samir, 35 lakhs LPA. See, anyone who are asking old versus new, I would simply say new. But if someone is having more deductions like you're paying rent, you have a house in a different flat, a different city, and your deductions are like you can plan for 10 to 12 lakh rupees of deductions, then only old regime makes sense. If you're saving my deductions altogether, NPS and everything is just 8 lakhs, go with new regime. So how much can we contribute in new regime annually? What is the maximum cap at? So maximum cap is 14% of your basic component. So my package is 20 lakhs. 50% will be generally basic component. So what happens is 10 lakhs into 14%, 1.4 lakh will be the maximum NPS I can contribute. NPS contribution is a tax saving component in new regime. Corporate NPS is a tax saving component in new regime, not entire NPS. Because if you're contributing on your own 50,000 from your bank account directly to your NPS account, that is not going to save you any taxes. Only it has to go through your company. Old regime people can contribute from their own and get it under 80CCD 1B. So if I want to retirement, how much I have to contribute per month? Okay. So that should be a person to person discussion where it is like how much contribution you can do it, but NPS will be your one component of your 5 crores. So let's say every month you're saving 2 lakh rupees, you can contribute 1 lakh rupees to NPS, and that 1 lakh rupees, uh, so 2 lakh rupees per month would be maximum, per annum would be the maximum contribution you can do it. That would earn anywhere between 1 crore to 1.4 crore based on the thing. And so your NPS is one component of your retirement, not an entire thing. So best age to invest in NPS. So as early as possible, if you're paying taxes, starting NPS is the best thing. You can save taxes if you have option. So early age, you can have a small percentage of contribution. Later, you can keep on increasing it based on the cash flow you have. Hi, my package is 13 lakhs. I have opted for a new regime. I have an NPS contribution from my company and personal out of the company. How will this help me? Can I show both? So, Isha, you cannot show both because the own contribution is not saving you any taxes. Have just your own corporate company contribution such that you fall below the 12.75 mark and your tax is zero. Best manager fund managers for each section. So Sandeep, we cannot go for each asset class with each manager. What you can do, you can select only with the asset manager. Asset manager will manage all the assets. So currently, ICICI and HDFC asset management companies are doing very good. Can I have my own NPS in bank and one more NPS in company corporate? Plan both. So Manjanath, yes, you can do it, but your own contribution is not having tax savings. Your company will get the tax saving. If you're in old, you'll get for both. If you're in new, you will get only for your company contribution. And both accounts will go into the same pran. They'll sit in the same account. Can you please talk about withdrawal of corporate NPS post 60 years? So, Ishan, what happens is at a 60-year age of mine, what happens is uh, at a 60 years of age, you will be given with an option withdraw up to 60% of your NPS as a lump sum, and which is tax free. And you can withdraw that money, and balance 40% will be bought into an annuity. So, annuity is something a scheme what the NPS people will select, where your money goes into that account, and monthly they'll based on the corpus, they'll inform you that this much of the amount is what you'll get it. So that is the way you will be able to withdraw that money. So from 60, let's say 60 years you have retired, and first month you will withdraw entire 60% and invest somewhere, and the balance 40% will be given as a salary to you, say 30,000 rupees per month, 40,000 rupees per month. Every month you will get that pension, and when you are no more, sorry for that, the amount will be given to your balance amount will be given to the thing. So annuity will be till you are alive. Every month you will get it till you are alive. Voluntary PF investment will help in new tax regime. No, Santosh. Voluntary PF is just your investment option where you are investing your money, but they will not help for tax deduction. How do you? So this is our QR code, and also I'll share my calendar link in the group, so you can just book a call with me, and I can help you out with some basic advisory, whatever you're looking for. So this is my calendar link. So whenever you can just give the details and book a call with me, and I can give you the brief information about you. And then, so I'm not paying any taxes. Should I still go with NPS? So from the taxation perspective, no. But as a person, if you're a person who cannot resist from spending more money and you are not being diligent with your finances, you can opt for NPS and your money is stuck. So you will become more diligent with the money. So that is the only way you can use the NPS to your advantage. Hmm. Best age. Is there any cap apart from 14% of your basic? As my basic is 20 lakhs. No cap, only 14% of your basic can go into it. Can we benefit with PF in new regime? If yes, how much? So yeah, new regime, as I said, if your PF is maximum contribution other than 1800 rupees per month, you can open your payslip and see how much is the PF it is going. If it is 1800 and above, you are in the maximum saving thing. If it is just exact 1800, then you have to talk to your HR. Yeah, I wanted to push my employer to opt for PF and NPS employer question. As you have told earlier, to drop a message, please share the email ID so that I can share my company details if that is possible. I think you can drop to the Ritu's email. Ritu, you can drop your email ID.
Yeah,
So
I'll do that.
we can talk to their HR if there is any different, I mean, any help we can do it from our way so that they can contribute more. We can help it out. If I increase my PF contribution to my company, will it benefit in new regime? Yes, Santosh, you'll save tax because you're contributing more. Your CTC will restructure and you'll save tax for sure. Can we get today's PPT? Yes. And post demise, will the nominee get monthly payout or till her life? No, post demise, what happens is your legal heir will get the entire lump sum, whatever the balance it is there. So let us assume annuity, what happens is if you have a 10 lakh rupee, 40% is equal to 10 lakh rupee. They'll put it as an FD and they'll give, example sake, they'll put it as an FD, they'll give that interest plus some principal portion. So in that way, they keep on, it's compounding and you're getting money. So there will be a balance by the time your demise, and they'll give that balance money to you. Corporate with new regime, please explain the tax benefits. So in the new regime, when you select corporate NPS and you select the percentage of NPS, entire percentage is allowed as deduction. So your 20 lakhs package, 1.4 lakh is the maximum you can contribute. And if you contribute 1.4 lakh, you will save tax on the 1.4 lakh. So that would be, let's say you are in a 20% slab, 25,000 is the tax savings you will get. Plus your 1.4 is 1.4 is with you, and that is invested into markets. So you're getting a good SIP kind of a returns only. And someone asked, can I switch out my corporate contribution of NPS in the middle of a year? So again, that is a company to company policy. You can definitely do it because, but again, company might not allow. So it is, let's be fixated that, what is it like? Every financial year you can decide. So first financial year you opted, and next financial year you won't be getting it kind of a thing. What is the maximum we can contribute? That is on your package, basic into 14%. Is there a lock-in period if I want to partially withdraw? So Ganesh, in the withdrawal, there are two things. One is your own contribution. That is 50,000 you're dropping from your own. You can withdraw only thrice during the entire period up to 60. If it is from your company, it is locked till 60. Or you have to just write them a letter saying that I'm retiring early. So what is it like? Then they'll give you 20% of the corpus. Will this change with the change in tax policy in the coming year? So, Kavita, I don't think there will be a change in NPS contribution things for the savings. Even if they change, the point is we'll stop contributing to NPS and invest that money somewhere. Although whatever invested till that date, we are saving taxes. That is the best way to go ahead. And also, I don't think they'll be doing it. They'll be keep on increasing it because, no, not to put it in a negative way, they can invest your NPS into government bonds and they can get the money from you back, right? So your money they're using and paying you interest. So that way, that's a good flow for them. So they don't do it, is my contention or my thought process. What all investments will benefit in new tax regime, excluding NPS and PF? Santosh, nothing other than these two. Maybe small thing is like leave encashment and maybe car leasing. Few companies who have an option and if the employee is eligible, car leasing is the best option to save taxes.
Anuram, in Q&A also we are having so many questions.
Yeah. A few I have written down the answers. Most of them I have sorted. I already replied. I'll be clearing those as well. So Vivek, if the corporate NPS is not available, it's just that few of you have to ask, and they can reach out to Etika and us. We can help talk to your HR and implement it. So yeah, that's a small policy. Yeah. Any other pension fund options that matches NPS? So as I said, Radhika, the pension schemes or all these schemes are by the insurance companies where they pay out a huge chunk of expenses to the people who are selling. And also what happens is, uh, how do I put it? Huge chunk of and there is a huge chunk of insurance what you're paying from your investment. So let's say it's the same 50,000 you're putting it. What happens is insurance company will decide how much of insurance they wanted to debit, which you don't know, which is an expense. And apart from this, there is a fund management expenses as well. So because of that, schemes are not so good. If you wanted to do with the NPS, go with government NPS or go with equity investments and insurance investments separately. Don't mix all the three together. So all these schemes are easy way to emotionally sell you some things. It's like what is it like children future plan or old retirement plan with the great photos and great terminology. So those are all the selling points, not something where they wanted to make money for you. Yes. So anything else? Equity investments helps in tax deductions? No. So that equity investments have to be in a different person. In no new regime, you have to pay taxes on the equity gain. So yeah, we have one NPS scheme for children as well. Is that good? NPS scheme for children, NPS Vasalya is for if you're thinking that you can contribute for good number of years. maybe, but not that great product from the tax saving perspective. So no. From tax saving perspective, no. From the perspective of saving for their future, like say 60 years, for their the compounding impact will be great. So it is good from that perspective. So Aarti, ELSS, if you are in old regime only, is beneficial. If not, you can stop ELSS and go with normal SIPs. No maximum limit. It is for the employer also.
Anuram, I have allowed Desh
Yeah.
Pandey. You can speak up.
Hello, Kedar.
Hello, am I audible?
Yes, Kedar.
Yeah. So I have a couple of questions. So my first question is, this is a government authorized retirement product, right? NPS. So is it the only product, or are there any other products apart
So
from the NPS?
technically speaking, it's not government authorized. Government has structured an NPS trust through which it is going to, again, our ICICI HDFC people only. They'll be managing your money. So
Mm-hmm.
because it is via government, they're giving tax benefit, and as well as one more aspect is no commissions in between. So only
Mm-hmm.
expense in this would be your fund house charging you small mild charges for your management fee.
Mm.
That's it. Yes.
Okay. Okay. When it comes to the this fund manager thing, do you so are there any particular criteria how we can check the performance of the fund manager? What are the key factors? Do you think that these are the important factors while selecting the fund manager?
So it is just like old school how we select our SIP, past
Mm-hmm.
performance and the perspective. So past performance basis, two people are performing very good, ICICI and HDFC. We can
Mm-hmm.
simply go ahead with them.
Okay, okay. And how about that, because I feel that many of the people, I'm not sure how they are familiar with this NPS and the NPS statement. So, reading those NPS statement is also another thing, how actually when selected any performance in a fund manager, and then if you wanted to read your statement, NPS statement, so there are some key parameters in it, how to read that. That also, if you can throw some light around that aspect as well, that would be really good.
So NPS fund performances are,
Because uh,
yeah.
yeah, because the thing is, you can change the fund manager, I guess, once or twice in a year, I guess. So
No,
whether
no,
you have
yeah,
selected
that is.
auto or active, in irrespective, I guess. So
I mean,
twice.
that is the problem with the fund manager changes. That is again, the company will come into the picture and those things are there. You cannot frequently switch because how which company is going with which fund manager is another problem. So
Mhm.
say your company has started relation with Axis Bank and Axis Bank is the one person they wants to go with kind of a thing. So you cannot switch that easily. So that process is still being set up. So yeah, there are some friction points over here. So
Okay.
on the NPS website itself, there is a fund performance, how much these people are doing about it. I'll just share that
So
in.
is it so whatever there in the NPS side, so that is what we can refer as a trusted
Yes,
source for the
yes,
performance
yes.
check, right?
Yeah, yeah,
Okay.
definitely. This will be the standard. This is by from government only.
Okay. So no other sources need to
Need not.
refer
No.
to. Okay.
Because what is general SIP schemes, there is no concept in these people. It's just the
Mhm.
manager. Manager is given 100. They have to do it for the pension. That's it. So they know
Mhm.
clarity that this money is not going to be withdrawn once coming in, and they have to manage it well. That is how it is.
Okay, and when it comes to the because I heard that there is actually if someone wanted to stop the NPS thing, so I guess that account should be active for at least for 10 years. Is it that criteria still there? 10 years for active NPS account. So and then you can have those withdraw the 40% of amount, and 60% will be goes to the annuity side. Or 60% with you will get that amount, and 40% will go to the annuity plan, right? So
Yes. Yeah.
so is that the criteria? Like can we say that the 10 years is the minimum period for the NPS? Or because there
This
are some criteria. Even though if I wanted to withdraw after 5 years as well, I can stop the NPS after 5 years as well. But there are some rules there, right? So.
So there is no concept of minimum this many of years you have to contribute or lock in. It is simply that once you sign up, you have your money will come back only after 60 years kind of a thing. That's it.
Mhm,
So you can start at 55, get out at 60. So you
mhm,
58 is a 58 also
mhm,
enter 2 years you can contribute and stop it.
mhm.
So there
Okay.
is no entry point, no minimum minimum thing. It is just your flexibility. But as per the norms, 500 rupees or 250 rupees, you have to
Yeah.
contribute to your NPS account.
At least once in a year to keep that account active.
Account active. That's it. That is going into your contribution only.
Yeah,
Just
yeah.
if you are doing that investment is the point. That's it.
Yeah, and irrespective of whether you are going with a corporate NPS or a personal NPS, like so even though you have corporate, you have opted in for the corporate NPS, you can still you contribute from yourself as well, right? There is no such limit like 50,000 or a 1 lakh or something. You can contribute as much you can, right?
Which one? Sorry.
In case of, let's say, someone has opted in the corporate NPS,
Uh,
so even though he can contribute to that tier one account or tier two account,
no.
right? There is no such limit for his own contribution, right?
So here the point is there is a limit for the contribution to
On
the tier one. Tier two, no limits. But
Yeah,
also
tier
there is
two
no
no
tax
limits.
benefits.
Yeah, but tier one still also no limit because only thing is
No, that limit.
50,000 is only for the tax standpoint.
No,
Actual,
no. So here the point is the 14% is the maximum what your company can collect from you.
yeah, that
Contribute on your own how much ever you want.
yes,
But
exactly.
from
So
your company side,
huh,
it is maximum
yeah,
14%.
yeah. For company standpoint, it is of max 14%. But if I wanted to contribute on top of that, I can
You can do
contribute.
it.
There is no limit in that case.
No limit at all.
Okay.
Yeah.
And when it comes to the this NPS calculator, is it that like so like whatever there on the site, that is the correct calculator we refer to? Like if I'm contributing what amount, so how much I will get after 5 years down the line or 10 years down the line. So what do you think? Like which one should I refer to? Like if I wanted to see how much money I will make it after a 5 year down the line, 10 years down the line. Let's say like based on my contribution I'm having. So where I
Uh,
can check that part actually.
I mean, it's just like a small calculator. What you can do it, 18% of, sorry, you can just put it like 15% kind of a return as an average over a period
Mm-hmm.
and calculate. So you can say you can by default thing like whatever the money you're putting in, you'll get 15% odd returns. But again,
Okay.
you have to be in active kind of a thing. If you're in auto, as your age is increasing, they'll reduce your equity
Yeah,
proportion, so
yeah,
your returns also
yeah,
will be lower.
yeah. That's true. And when I compare NPS as a product with the other private banks retirement products, how do you see that comparison?
The
Uh,
problem with the banking products is they mix up many things.
hmm,
So here it is clearly given government mandate. So these people will not take risk. In case of banking people, what is the problem is they don't know what they are selling. The person who is selling itself doesn't know what he's selling. And because of that, there might be a trouble. So I would prefer you have to segregate everything properly.
hmm,
Go with SIP for equities. You go with a mutual fund distributor or banking person, pure SIP, pure insurance as separate investment.
hmm, hmm,
And third one is your FDs for your emergency purposes and stuff.
hmm, hmm.
That mix should be maintained by you. If the Amman is saying that all mixed product, just get away from it.
Hmm.
Just run from that products. These are all
Okay.
stupid products where they wanted to make commissions or money, not something for you at all.
Okay. Yeah. Sounds good to me. Thank you for all this information. Thank you for this
No
insight,
problem,
Anuram.
Kedar. Anytime.
Thank you.
Thank you, Ritu.